Hello and welcome back to Money at Work. My name is Corey Nichols, and today we're going to be taking a look at the overall market spike up that has occurred today on November 5th. Before we dive into that, though, I do have to read a small disclaimer to you guys. This video and all included discussion, dialogue, and resources are intended for entertainment purposes only. This channel is not intended as investment advice. As an investor, it is your responsibility to do your own research prior to making any investment. If you do not understand how an investment works, contact a licensed financial advisor. This video is accurate as to the date it was recorded and published. Video content or postings may not record or reflect accurately in the future. With that said and out of the way, I do want to dive into my portfolio here on Robinhood. As you can see across the board, every stock option that I'm invested in, including Bitcoin, is up for the day except for one. I'm going to go ahead and click on Transglobal Energy, which was one that had a very, very bleak kind of outlook overall. As you can see, it's kind of dropped down pretty significantly throughout the day, and I'm not overall surprised by that. I'm going to go back here to the portfolio, though. What I am surprised to see is this just huge growth throughout the day. Right now, you can see that as for today's return, we're seeing some really, really great growth, including that in Great Elms Capital, which is a stock that I have talked about pretty extensively on this channel. It's an excellent monthly paying dividend stock, 38.91%. Unfortunately, though, there has been some changes to GECC. We'll talk about that in just a minute. But I do want to go back over here to the portfolio because, simply put, investments are inherently risky, and you never have a guarantee that you're going to get back what you invested. And I want to look at this today. Just from this morning, we have seen a 2.438% growth, which relates to $21.26 made off my portfolio just today through evaluative growth. So that does not mean that I'm getting a check for $21.26. It just means the value of my portfolio has gone up $21.26, which is incredible. I was speaking to a lady the other day, and she was telling me that the stock market is way too risky to invest in, and I completely disagree with her. Yes, it is risky, but it's not too risky. I want to look here. Calculators.org, there is a financial calculator on here. If you were to invest $750 into a savings account at an average interest rate of 0.6%, which is actually on the higher end of my area, with compound determined monthly, if you've left that money in your account for 5 years, we'll recalculate this to show you that nothing changed, you would end the 5 years with $22.84. $22.84, which is incredible to think that off that $750 investment, it would take you 5 years to get to what I was able to make in a couple of hours off from my portfolio. I told you guys in yesterday's video, the market has been very, very turbulent these last couple of days for two reasons. First and foremost, it's been the presidential election. That has had more of an influence even than COVID at this point. And then the second reason being COVID. I had checked earlier today, and I've really been keeping a very close eye on it because it does impact investments. I'm going to pull up here the election update. As we can see, Biden is 264 has 264 electoral votes. He only needs 270. If he gets Nevada, which has been very close and has been kind of in his favor all along, he will have won the election. And a lot of people were saying that if he won, we would see the market drop way down. I think at this point, everyone's pretty much expecting that Biden's going to win. I know that there are a lot of Trump fans out there. This channel does not support one candidate or the other. We do understand that we did see a lot of growth over the last 4 years while Trump was in office. But again, with Biden there, we did see this very sharp growth. And I kind of predicted that the other day. I never made any predictions on candidates. That's not my cup of tea. But as I said in another video, that we were going to see markets be very turbulent until we had a winner, and it didn't matter who was going to win. Once it was done, we were going to see the markets stabilize, and we were going to start seeing growth. Now, no, we're not going to see as much growth as if COVID wasn't going on. COVID is still a very real, very serious kind of stumbling block for the market that we do have to overcome, and we are going to overcome it. But that said, if COVID wasn't going on right now, I really think that we would have seen closer to a 7 or 8% spike in growth over just today alone. Right now it is going on almost 1 p.m. I do think we are going to end the day with a market growth around 3.5%, maybe 3.25%, somewhere in that ballpark. I think is a pretty conservative number. You can see that right now, like I said, when the market opened, we've seen a lot of growth. We've seen some growth throughout the day, and I think right now there's just a lot of anticipation. Nevada has been taking a serious amount of time to count their votes. They were supposed to have an answer yesterday afternoon, then it got postponed to yesterday evening, then it was postponed to this morning, then it was postponed to 11 a.m. today, and it's, like I said, almost 1 o'clock. It's 12:43 right now, and there's still no update on them finishing their count. So I think if that happens today before markets close, I think we're going to see a little bit more of an uptick. Maybe upwards of 1%. No guarantees again on that. If we don't, I think we are going to see markets still go up a little bit, but not a whole lot. Overall, I think we are in really, really great shape. That said, though, right now, in my opinion, is the time. If you have money setting aside, I can't see a better time to invest than right this minute. Again, if you would have had $1,000, I mean, you would have had closer to, at that point, probably $26, $27 worth of growth just today. If you had $5,000 or $10,000 to invest, again, don't invest all that into one stock. Invest it very wisely. And if you did your research, you could have ended today with several $100s in profit. And I think over the next couple of weeks, that would just continue and continue and continue to grow. Again, unless there's something majorly unforeseen that occurs. Now, right now, all across news outlets is talk about more shutdowns here in Michigan. They're talking about as early as the beginning of next week. I don't think that that's something we have too much to worry about at this point. What I would worry about is a very, very extended shutdown, or if there isn't a shutdown for quite a while, and then we all of a sudden experience one again. I think right now, if we had one, if it was a month and a half in length, I think we'd be completely safe. Some of our REITs would probably stabilize or go down. They're not going to continue to grow. But some of our other investment shares, some of our stock ownership into consumer goods, I think that those would continue to go up, as we did see this last time around when we had our shutdown back in March. Going here to the 1 week view, you can see that there's been, well, that was the weekend, but there was some growth, but a lot of fluctuality in here. I mean, it's like a roller coaster going up and down, which it's going to be okay for us to see that, but we want to see continued growth. So, I mean, looking at this portfolio today, we are in the green. 1 week, we are in the green. 1 month, as you can see here, again, just based on presidential election, we've seen a lot of fluctuation and quite a bit of drop here starting on October 26th, which is pretty sad to see. In fact, we went down, what's that, 7.48%, which I know some people are saying out there, well, you didn't really make, 2 point whatever percent it was today when you had dropped down 7.48% on the 31st. And that's absolutely true. But I know that my stocks, the investments that I made, have been very wise. They fit into my individual portfolio. And those stocks, for me, are going to gain. They're going to regain where they were. And I think that I'm going to be making back quite a bit more money. And I think overall, by the time that this is done, I'll have easily doubled my investment based on the stocks that I have individually picked in the investment schedule that I have. Again, I'm not going to be waiting around for 5 years, or even if we reset that's 10 years, I'll have made $56, or sorry, $46. We go down to 2.5 years, $11.33. And we invested our money for a year, we're talking about $451. Now, the interesting thing is here is if I was to save $425 into an account at that standard interest rate for 1 year, I would have made $2.56. And I want to show you guys something that is very, very interesting. And back here on our portfolio, I'm going to go to accounts. I am going to go to my actual account. Actually, I'm sorry, I'm going to go to accounts and I'm going to go to history. I'm going to click over here on dividends. You have to excuse the internet here for a second. There we go. As you can see, look at all these dividends coming in. These are great payments. Right now, we are waiting on Prospect Capital, which is one of those monthly dividend-paying stocks that I told you guys to kind of keep an eye on. I think that there is some benefit to this. The second one is coming from Timber Royalty Trust. Let's see here. Prospect Capital is at 6 cents a share. Timber Royalty Trust is at 7.65 cents. So one share in there, they'd round that up to 8 cents. So really great. For a quarterly paying stock, Atlas here is an amazing investment option. I only own one share in it, and I absolutely do not know the reason why. I do think that it's slightly evaluated on the higher end. This stock has seen some major growth since I purchased it probably about 6 or 7 months ago. Fairly inexpensive. I'd have to look up the price at this point. In fact, the reason why I bought it was because I love the name Atlas, and I've been kind of really keeping an eye on this market. It's a Canadian company that works with transportation of goods. I do think that we're going to see this stock go up pretty significantly if there is another shutdown. So I'm going to keep a close eye on that. Eagle Point Credit, ECC is the ticker symbol. This is another one that I've told you guys to keep a really close eye on. It's a monthly dividend-paying stock at $1.98 this month, the 24 shares. The amount per share is 8 cents. That's not changed in a very long time. You can look it up on the NASDAQ. I think since it's pretty much been around, it's been set at 8 cents a share. I've done all the market research that I can find. There's a lot of speculation that dividend payment's going to go down, but there's not really any justification on why they think that that's going to happen. And then the last one, I think this is all from, these are all recent from this month, is from, let's see, 0.3 cents here. So this is another one of those stocks that I'm just kind of keeping an eye on. I only own one share in it. It's not anything that I think I'm going to invest into right now, but it is something that I'm watching. If I think that the value of the stock is going to go up, then I will transfer some of my investments into that account, and would hopefully see that grow. But right now, I did want to look at here. So Eagle Point Credit Union, 392, 384, 376. I mean, that's a stock that is paying out every single month. Like I said, I did sell off some shares in there, which is why this one here is lower. I sold off approximately half of them. But jumping back over to this calculator, I mean, each month having $425 in stocks owned in ECC, I'm making back more than what it would take a year in an average savings account. So I'm making back 12 times the amount just in dividend payments based on my investment of $425. Now, again, I told you guys that I sold some of those shares off, so I'm not at $425 right now. But if I go back over to Eagle Point Credit, again, ticker sign ECC, I have $208.08 in market value. It's a little bit down. It cost me $209, but that's okay. Even if I lost that dollar, I'm making back, what was it, $3 and what? I'm going to exclude this first one here, $3.92, or we'll go off the 384. So 3.84 times 12. I'm making back $46 a year dividends just from this one company, one investment of $425. That is incredible. Again, going back to the same calculator, even if I put in 5 years and I recalculated that, 5 years I would have only made $12. 10 years, it'd be around $26. Let's go 20 years. It would take, well, let's say 15 years, and I still have not paid back that same investment that I could have made in 1 year of investing that money. That is how powerful the stock market is. And if you don't think that, you're a fool at this point, because yes, there is risk, but you cannot only stress about that risk. Let's look back here at my portfolio. We've already seen a little bit more growth. We're up to 2.58%. Again, it is going to be explosive the next couple of days on how much portfolio values are going to go up. If you're not investing at this point, you need to. You really do need to. Even if you're just starting off with $5 or you're starting off with the free share that you get from signing up with Robinhood, anything works. I will tell you, though, that a lot of the free stocks that they do give out, unless you get one of the top ones, a lot of those you give out, I do sell them off. They're generally not dividend-paying stocks. In fact, I don't think any of mine have been. I could be wrong on that, but I'm pretty sure not. But you have to hold on to them for a few days, and then you can sell them, and then you can take that money. You could withdraw it, you could pocket it, or you can reinvest it. I always sell mine off and then reinvest it. And I reinvest it into the companies that I do a lot of research on. Don't ever just find a stock and blindly put money into it. That's horrible. Even me, I'll do research on a company for a few hours. I'll finally make an investment of just $100. Think of that, just $100. Something that most people wouldn't even think twice about investing. I would put $100 into a company after a few hours of research, and then the next day read something and go, oh crap, I wish I would have seen that. Case in point, we'll go over here to GECC. Great Elms Capital is still a very great investment to make. We're already seeing some growth here. A lot of people said that this was not going to recover if Biden won. Biden is in the lead right now. I do think that he is going to be elected. And look at this growth we've already seen today, 2.39%, which is on target with what we've seen roughly for our portfolio growth. Going back here to the 1 week view, this stock just plummeted. I told you guys we need to get in this while it's cheap. Even as of like October, October 28th, we just seen a major drop down here. 3 months, it's down. 1 year, we've seen it down. Again, over the year, the stock price here was floating around high 7s, low 8s. And I don't think that it's going to recover in the time that I own the stocks in this company, because I'm not going to hold on to it for that long. I'm going to hold on to it for probably 3 to 6 months. Once I see this getting back up to even the $5 range, mid $5 range, I'm selling out of it. I will take that money and I will invest it somewhere else. Right now I had invested $386 into it. If it goes back up to that $5 range, I will have almost doubled the money that I invested into it. And that's really crazy to think. I mean, if my average cost right now is $284, so if it was at $250, I would have doubled it. So like I said, not quite doubled it, but I would have done that in addition to making back the dividend payments on here, which were just over 8 cents. It was 8 a fractional amount. Unfortunately, though, they did announce that for the remainder of this year, 2 things, and I talked about this in yesterday's video. They were only going to be awarding 10% of dividend payments back in cash, and then the remaining 90% was going to come back as to additional stock ownership. So if you were going to get $20 worth of payments, or $20 a month in dividends, they would have gave you $20 credit back into your account, and then they would have given you the remainder in stock options, which that would have been, another 8 shares. Unfortunately, though, it should say right here that there is pending a pending dividend payment, pending kind of transaction towards it. and there has been nothing, which really doesn't make me concerned. I said yesterday I sent out a message to their investor relation board, and I also sent a message to Robinhood. Neither of them have responded to me yet. I'm reading a lot of people online about that. If I haven't heard back, I think the November 6th or November 7th is the next dividend payment date, and actually we'll look that up right now. We'll look that up now on the NASDAQ. I want to say it's 7th, but it could have been the 6th. Oh, no, I was way off. The 20th. If I have not seen anything by the 21st, then I will likely sell off my shares of GECC, and I will be investing it elsewhere. Now, I do want to say that there is one stock that's not one that I'm watching for dividends, just a stock that I like for growth, and that is GE. GE right now is floating around the $8 mark, but when I click back here on the year, we have seen that prior to COVID, it was floating around the upper $10 to $11 mark, and we just seen it kind of plummet down. Overall, over the 5-year stretch, it's really taken some beatings. I think this is going to be the year for GE to come back. I think GE is going to be working on, we have GE Health, which manufactures different kind of medical supplies. Right now, they have a power infrastructure with renewable energy, aviation. Right now, aviation's been hit very, very hard. I think we're going to see that coming back pretty quick. I think the healthcare side of GE is going to grow pretty quickly. I can't really speak to the power segment. I don't know too much about that area of the investment. The commercial airframes, I think once we do see airline manufacturers ramping back up, I think the airframes are going to be something that's going to be very challenging to find, and I think GE is going to be set way behind. I think they're just going to be working a lot of overtime getting those airframes out. So maintenance, I think also there's going to be a lot of planes that are going to need maintenance after they've been sitting on the ground all these months or only lightly used. Again, less than 1% dividend yield, so I'm not investing in this for dividends, even though they are paying dividends, and I'm 99% sure that those are quarterly dividends. But I like the stock because of the potential of the growth sector. So if you're not into investing for dividends, you might think you're crazy. GE might be a stock to kind of keep an eye on. We can already see that today it's gone up a little bit, not a whole lot. But again, that's the side of investing. You're going to see growth. You're going to see downfalls. Now, if I was bought in right here and I seen it go up and then I seen it drop way down, I'm not going to sell. I'm going to hold on to it until I get as close to the amount that I invested in or have earned back more than what I spent. So going back over here to GECC, Great Elms Capital, on that real quick, you can see that, again, it cost me $386 for where's it at? 136 shares in this company. Right now, the market value is $348. So I'm about $40 at a loss at this point. But again, I'm not at a loss until I come up here and I decide to sell my shares. And if I sell those shares, then I would be at a loss of $40. But if I continue to hold on to them and they continue to build value, and I sell them when they are in the green, and not necessarily in the green on this graph here, but in the green as in over the cost that I spent, then I am doing great. Even if it's just a penny, I'm happy. Because again, with those dividend payments, even though right now there's a lot of restructuring in the company and COVID's really affecting the dividend payments, the stock prices are more affected by the presidential election. Dividend payments are being strictly affected by COVID right now. Even if it comes through and we're getting the ownership of these shares, if I hold on to it at least to the end of the year, by my projection, I'll own approximately 200 shares at that point. 200 shares times the cost per share, even if this dropped down to $2 a share, it's $400. Minus out the 386, 38. I walked away with a profit of $13.62 plus 10% of those dividend payments, which wouldn't be much, but again, it would be much better than nothing. So, or even much better than putting it to a savings account. Yes, I have more security in a savings account and less worry about losing anything, but I also don't have an option to really turn my investments into kind of a passive income. So, again, a lot of things to consider here. I do think that the presidential election is going to have a little bit more to play. I'm going to go over to my accounts here. You guys can see that I haven't really switched anything up. We're just seeing some really great growth. There's not been any new deposits since yesterday. Cryptocurrencies, right now I'm hearing that like Bitcoin is floating around. The last I checked, the $16,000 mark. There's been a lot of speculation on the radio that that's going to hit easily $20,000 to $21,000 before spring rolls around, so that could be something worth investing into. I don't think at this point that it has the type of short-term yield that I would like to see out of it, and I don't like to tie up too much money into long-term investments unless I'm really, really for sure on them, and cryptocurrencies have had way too much turbulence for my enjoyment. I know that I think it was PayPal and there was another company that they're going to start offering their customers options to purchase into cryptocurrency, and they felt that that was also going to be another factor to push it up probably over the $20,000 mark. So again, something to keep an eye on. Here's a breakdown of stocks. NVIDIA. I think this is something worth watching. It's shown consistent growth over the last 5 years. They are a computer graphics and chipset manufacturer. They develop software too, so they have both the hardware and the software factor. I do think that they are going to be a company that's going to continue to grow at least over the next couple of years. So it's something, again, worth keeping an eye on. Again, very, very low dividend payment. It is quarterly paying. It's not a company that I'm necessarily watching for those dividend payments, but it is one that I'm looking at for growth. So right now, I bought in at an average price of $535. It's going for $563. We're already seeing some growth, a lot of growth in this area. So even though I only invested $1.81, which was just a remainder that I had in my account, I like to keep everything invested right now when things are low. It's already made back 9 cents for me. So if I invested, and just out of curiosity, if I invested that $1.81, again, I'm not adding to it monthly at that interest rate. Even if I invested that for 30 years, I would have I'd make back 36 cents. Over the course of a year, I'd make back 1 cent. So it is something we're keeping an eye on. Again, it's going to be more of a long-term investment. I really wish I could have got in down here at the, closer to the $130 mark, or even back here at the beginning and the $30 mark would be very, very profitable at that point. But again, that's pretty much it for today. We're going to be keeping a very close eye on the presidential election. We'll probably make another video beginning of the week. Should be our next one. I don't think we're going to do one at the end of the week unless there's something major that happens between now and then. Like I said, though, investing does have inherent risks, so please invest responsibly. I am not a licensed investor, so if you do have any questions or you're not understanding something, please seek help from a licensed professional. The investments that I went over today are for my individual portfolio, and everyone's portfolio is different. Everyone's investment needs are different, so please do not just copy my portfolio. If you would like to use Robinhood, if you don't already have an account, signing up gives you a free stock, and it also gives me a free stock. 1 in 150 has a chance of being a pretty significant investment. So please, please, please take the time to sign up using the link found in the comment or in the description below the video. If you have any questions, please leave a comment or feel free to reach out to us directly. Other than that, guys, I hope that our election here is determined pretty quickly. Best of luck to everyone who is investing, and until next time, we'll see you then.